good afternoon, good evening, depending on when you're watching this video. Right before you is a chart for GBP/USD on the weekly time frame, and before that I'm gonna make a recap on I don't know if you remember how we represented the bullish version of the standard trading model from the previous videos. This is exactly how we represented it. My drawing, bear with me, might be terrible. So we said we should have a sweep of liquidity here, first break of structure, then this lower low here becomes the inducement where we take a buy. This is where we take a buy, right? Then we said this one becomes a stronger lower low, whereby we set our stop loss. Then we target this previous high for our take profits. So that means, going by that logic, with this chart, with this GBP/USD chart on the weekly time frame, we have a sweep of liquidity here, which is right this one. Then the clearest first break of structure is right here. Then it means this guy here becomes the endorsement. This becomes this one where we take our buy. This is exactly where we take our buy. And by taking our buy here, by setting our buy order here, it means that we're supposed to set our stop loss below this line here, below this stronger lower low that has been created here, and our target right here. But we normally take profits at the nearest liquidities. Of course, this was the weekly. How stupid will you be staying in the trade all this time without taking profits? What if the market reverses on you? And you know very well that anything can happen in the market, and our age is not 100% guaranteed. Yeah, that's the nature of trading. See, each trade is unique. Every trade setup is unique, and anything can happen in the market. So, with this reasoning, is it really logical to set your stop loss with all these pips? This is a bigger risk exposure in the market. Yeah. This is a very wide stop loss from here to here. From here to here, that's a very wide stop loss. And by saying that, I'm going to do a top-down analysis on exactly how we can anticipate these trades from the weekly time frame. As you can see from this chart, from this one, from the weekly time frame, this zone here, this zone right here, this zone here. I'm gonna drop down to the daily time frame. This is the same zone. This is on a daily time frame. The other chart was on the weekly time frame. As you can see here, this is the zone. This is where we hit the zone. Yes. And how do we draw this zone? Maybe someone will ask that. This guy here. Okay, let me show you here. You see this week? See this week? We take this zone from the high of this week. My line is even terrible with the lower low of this week. We take those wicks. That's exactly what I just this chart over here. Then when we move, this is exactly what is happening on the daily. Yes, this is exactly what is happening on the daily. This is the zone. When the market hits this zone, what are we supposed to do from there? This is our age. See, the market is fractal in nature. Anything that repeats, anything that happens on the higher time frame occurs on the lower time frame. Yeah, there's similar patterns on the higher time frame occur on the lower time frame. Yeah, so we had a sweep of liquidity on the weekly time frame. Yes, I think this right here was the sweep of liquidity. So this one here was the sweep of liquidity. So we don't. Once this zone has been hit, see, zone has been hit, let's expect to see the same pattern, the same pattern being printed, the same bullish standard model to be printed right here. Here, see, this one here is the sweep of liquidity right here. Then I remember on the first video that I made introducing this model, I said that for it to be a high quality setup, there should be a market structure shift, right? That's where now you build your confidence to take this high here. Now, right here, you can see what? This is a market structure shift. Sweep of liquidity, see this high being taken becomes a market structure shift, right? MSS. Then after this high has been taken, after the market structure shift, you go look down again. Where was the first break of structure? See, the clearest one, it was around here. That was the clear around there. And now, where is the lower low for the first break of structure? This is the one. This is the one that we can see right here. This is exactly where we take our buy. This is exactly where we take our buy. Yeah, and we set our stop loss right here. Compare this risk exposure, the size of this stop loss on the daily time frame, and the size of this stop loss on the weekly time frame. All this one was supposed to be our stop loss, but we've refined this trade like professional traders. Don't just place trades anyhowly. We refined from here to here. Someone was saying that what we usually do from the higher time frame as we move down to the lower time frame is just refining our stop losses, because everything is, the market is fractal. Everything that happens on the higher time frame occurs on the lower time frame. Yes, the narrative that you build from a higher time frame will reinforce what exactly we are going to do on the lower time frames. So this here, this size of the stop loss here is a little bit we can absorb that. Yes, and what is our target? Ta-da! Has been smashed like magic. TP smashed like magic, and the market continued up and up. We are still going up. We are still going up until this is the TP. From here, we ride up. Yeah, but with this smaller move, I'm very sure the good analysis. Oh, we're all smiling. Yes, it's even enough for the year. Just one of this. Just one of this setup is enough for the whole year. Yes. Now, let's continue dropping down onto 4-hour time frame. What is 4-hour time frame saying? This is exactly what 4-hour time frame is saying. With the same setup. GBP USD. Yes, on December 6th. Here's sweep of liquidity here. Let me draw the pattern again here. This is it. This is our edge on the bullish, on the bullish side. Sweep of liquidity is right here. Market structure shift. This is it. We took this guy. Taking that guy, we look back and see where the first lower low, first break of structure lower low is right there. Boom. And what is our target here? Where do we set our stop loss? Here. The stop loss. I know most of us will freak out when this market goes this direction and takes this liquidity. Without us saying, take the money at the nearest liquidity sweep. So you take your money here. When this market comes again and sweeps this is a sweep of liquidity. On the lower time frame, you gotta see it very well. A sweep of liquidity very clearly. We have market structure shift somewhere. I don't know exactly. This is where market structure shift occurred. That's where we took it. But here, I have a sweep of liquidity here. So that means we draw our zone. No support. This one becomes a protected lower low. So we take out our buy order right here and we ride. That was as easy. That was how it was easy to take advantage of this this setup that occurred between, it was September or this October, November. Yeah. We would have been October, November, between October, November. This is what happened in GBP USD. Keep it simple as it is. Keep it simple. From different perspectives. You can even see on the downward perspective here, market structure shift. This is the first break of structure. There's inducement here. Target. Ta-da! Boom. Magic. Yes. Getting this down and you've understood something, learned something, and yeah, this is exactly how we anticipate our trades from the higher time frame as we move down to the lower time frame, as we're refining our stop losses. Yes, that is exactly what professional traders do. Yeah, they see the market from a bigger picture, creating a narrative, then dropping down in the lower time frame. Yeah, while finding the stop losses, and I should say this, that yesterday I was looking at McDougall's trading in the zone, and something that caught my attention was that still on professional traders, that we should never assume as neophytes or other traders who are not consistent in the market that professional traders are also susceptible to these errors that we make. while trading. It is like jumping the gun. It is like cutting down our profits. It is like overstaying the market. Like we lose a lot of money. Never assume that these guys are also afraid of being wrong. No. They are also afraid of losing money. No. In fact, they are not afraid. That these guys are afraid of missing out. That they are afraid of leaving money on the table. They don't. That is your own assumption. And he was able to bring out this point, to nail down this point with the story that he gave of a man who was a father to a daughter who feared snakes. He did fear snakes. So one day they were invited by their friend to have a dinner. In the friend's house, the son kept a snake as a pet. So while they were chit-chatting together, the son came out with a snake pet. You can guess what happened with the father. The father jumped up and stormed out of the house because of fear. And he was totally surprised. He was surprised of, you see, what surprised him so much was that her daughter was never afraid, didn't even got frightened by anything. In fact, the daughter went and touched and played with the snake. So, our beliefs of professional traders doing exactly our belief that professional traders being susceptible to the same mistakes that we do while trading are not the case. Just like that father's belief of being afraid of the snakes, he thought maybe that her daughter will also be afraid of snakes. That's not the case. Yes, these professional traders, he moved on and I wrote something that, what do these guys do that separate them from the crowd? Then he moved to say, when you accept the risk, when you accept the risk the way pros do, you won't perceive anything threatening. If nothing is threatening, there is nothing to fear. If you are not afraid, there is no need for courage. Yeah, that is true. Okay? If you're not stressed up, then what is the point of having nerves of steel? So, the point here is accept the risk. Risk management is very, very important. As you can see from this setup, yes, you can take your trade here and put your stop loss here. Nobody will crucify you as long as accept it, that you accept losing this kind of money that is being exposed here. But for us, who want to be like professionals, we're trying to minimize the risk as possible by running our setup, by doing top-down analysis from the higher time frame to the lower time frame. See here on the daily time frame. So this is a little risk to be exposed in this one right here. And you can also move to the 4-hour time frame. If you can't take this trade here, then you can come over, you can wait until you can, but there's a chance this market might leave you. And see, if you're sure that this guy is gonna stand, then yeah, You can refine your trade. You can drop down even on the 30 minutes time, 15 minutes time frame. Yeah, to keep your stop loss as tight as possible. That is it. That is it for this video. So I've shown you just one example, and the best thing to do as a student, I am advising myself, because this is my journal. Yes. And the best thing as a student is to go deep down on charts and look for these patterns. Look for what I've explained exactly here. Bury yourself on charts, not only on GBP/USD. These patterns occur in almost, okay, I'm a Forex trader. I don't know maybe in the, oh, I did indices, Nasdaq, it works like magic, this pattern. Yeah, I don't know in stocks, it's something of that kind, but this setup here, just put your time on it. You will make extreme money on it. Yes, that is it. So if you like this kind of content, if you like me to continue posting this kind of content, give me a like on this video. Put a comment on what you want me to do next, and even improve on, so that we can make money together in this market, so that we can grow together. That is that is my desire, that we all make money together. Yes, that is what I mean. Thank you for watching, and take care. This market is not your brother. Thank you, bye. It is a murderer. This market